get more. And we're joined by Peter Esho, Managing Partner with 100 Doors. Peter, good to see you.
Thanks for having me.
Let's just start in the States. Obviously some very positive news as far as jobs are concerned. Further sign, I guess, that the US economy is tracking well.
Yeah, the momentum in the US economy is now very, very significant. The unemployment rate is below 6%, 5.9% overnight. And we've been talking on the program for the past few months that the rate of unemployment is improving relative to Australia. Australia is now at 6.4%, and the United States is at 5.9%. So this improvement in the United States is consistent. It continues. It's not a statistical anomaly. We've seen US markets, the stock markets in the United States hit all-time highs. The housing market is improving. And that's quite positive for the global economy because the United States is the largest economy in the world.
So as the US improves, what does it mean for Australia and particularly the dollar?
Yeah, Australia's lagging. A couple of years ago, we were patting ourselves on the back saying, look, we survived the global financial crisis. Look how fantastic we are. We thought that we front ran the crisis, but we were actually lagging. Now we're paying the cost for the lag. We were overexposed to commodities. The iron ore price, which is our greatest export, has slumped, and the Australian economy is showing the vulnerabilities of being overexposed to commodities. The currency is coming down, and I think that's very significant. I think that's what will save our economy, the reduction in our currency, which was very uncompetitive, and we've been paying the price for an uncompetitive currency up until a few months ago.
Yeah, certainly exporters are going to love it. Travellers, tourists, probably not. But who counts more here as far as the economy is concerned?
Well, that's right.
But it's also a story about the US dollar, though, isn't it? As it goes up, the Aussie comes down.
Absolutely. As that economy improves, as a lot of the desperation behind cheap rates comes out of the market, the bond buying, the printing of money. And I think the currency coming down in Australia, if you're travelling overseas, that's not great. But there are so many businesses in Australia that have been hamstrung, that have been made so uncompetitive because of the currency. You walk around major tourist destinations in this country, they're so beautiful, but they're uncompetitive because Australia became too expensive. I think that will change. We're talking about an Aussie dollar now that's around 86, 87 cents. That's very significant, and that's going to start having an impact on our economy over the next 6 months or so.
So we're also seeing, obviously, more money flowing into the States, perhaps out of Australia, because there's a prospect that the US will raise interest rates.
That's right.
I think they're now talking perhaps July next year. And that's also affecting, would you say, the stock market here? And we've obviously seen a bit of a collapse in prices.
Yeah, our stock market is very different to the US stock market. The top 10 names in this country are about half the stock market. That's very unusual. We have banks and resource stocks. Our banks ran up very hard. There's a lot of discussion now around taming the banks in the way that they lend. And the resource companies have been weighed down, and particularly what's happening in Hong Kong now, in China, the sentiment isn't that great. So about half our market is looking very vulnerable. That's what's pushed our stock market lower, and that's where the gap has really opened up. US market at all-time highs, Aussie market not really going anywhere, and as foreign investors take their money out of Australian stocks, that drives the currency down.
And Peter, could the dollar have an impact on our housing market? Because we've heard a lot from the RBA, haven't we?
It's
about
very
housing.
interesting, yeah. If you look at what's happening in Hong Kong, that's a major financial hub. And with those protests, with this snowballing effect now, I'm sure there's many wealthy people in Hong Kong saying we need to get our money out. Australia, all of a sudden, over the past few months, our currency's fallen, so we start to become, on a relative basis, a lot more attractive. So the currency, I think, will have an impact on property. Maybe not so much residential property, because that's run very hard, but I think commercial, industrial property, the larger types of investors that are looking at moving significant chunks of cash, the areas of our property market that have been weak in those areas may benefit.
Nonetheless, there's obviously still going to be significant pressure, upward pressure on residential prices, and it's not going to help the cause, is it, if you have that cash coming out of certainly mainland China and now Hong Kong?
Not at all.
And that's what the RBA is worried about. How on earth do they try and subdue these prices?
Well, the RBA has slashed interest rates to all-time lows, and there's a cost to that. There's a cost to everything. You can't reduce interest rates, really rob borrowers of their interest of money in the bank and not expect other consequences. And now we're now having to pay the price. There's a price to everything, and the price is now house prices that are really unsustainably rising, and something needs to be done. Let's just hope that what's done isn't counterproductive and doesn't bring around unintended consequences.
Peter Esho, thank you very much for your time.
Thanks for having me.